Hey, it's Soleil, and this is episode 252 of the Orange Pill Investor. And I need to manage some trades, and I got to do it quick because I got shit to do. But I also need to make a decision, especially on this MicroStrategy dip, if I want to do something drastic in this 5K account. Um, but I should have taken care of this yesterday if I was paying attention. But I got 3 of these $9 puts in CLSK. They are ripping. I got paid 28 bucks a piece for these. They're only worth 3. So I've already collected 25 of the $28. That's like what, like 90% or whatever. And each of these is obligating $900 worth of collateral. So that doesn't make any sense to try to squeeze the last $3 out of here on and holding up $900 of collateral. So it is time to manage these trades. So I'm just going to pay the full price, the asking price of $3. These should fill. And now I've got a bunch of buying power here. And so this is kind of the way that I had hoped this would work, because when this shit the bed, I started this in March with, like, I can't remember, early or late March, but anyway, right around here with 5 grand, started it. And then shortly thereafter, within just a couple of weeks, I had turned 5 grand into 3 grand. And so this was the point when I wanted to be using as much margin as possible. And then when everything rebounds, now I'm going to get the gains from the stocks recovering, and of course the premium that I'm collecting along the way, but also going to be kind of double dipping on profits because I had stuff on margin. So this is this is not the time to be like loading up on more margin. This is where I should feel good about not really using a lot of it. But I don't know that I ever want to just be at zero margin. So I've got a way too much uh, buying power here. Now it says in Robinhood is really hard to figure out how much cash do I really have, how much margin do I really have. So maybe I actually have 1,500 in cash. So I'm going to take a look at this. And when I manage this trade like I just did, I have to decide, does it make sense to continue with that strategy and just load up on more puts at the new price, at CLSK's $11 price? And I already took a look, and the premiums look pretty good still. So that is an option. But MicroStrategy is on a bit of a dip. Now, of course, it's when I say it's on a dip, it's up 182% year to date. But it hit all-time highs, hit a little bit of resistance at 210, 220-ish, something like that. What did it hit? Yeah, 220. And so now it's either going to retrace and find support again. And if I had to guess what support really is, I don't want to go back too far, but I mean, true support is at 130. This is when we really got, I guess technically support is here at 100, 115. So is it possible that we see 115 again? Absolutely. And support doesn't mean that's like an unbreakable wall. So the next support line below that is like 80, 75. That would be brutal. Um, but if I am calling this a dip at all because it's 10% discount off its all-time highs, then what would it look like if I attempted to move this 5K account to a all MSTR poor man's covered call type strategy? I might kind of this is just short of a leaps, but let's just see if I can even make it work for December. A long call at 180. That's a 0.73 delta, so that just barely qualifies. Would cost me $8,200. And in order to do this, I would have to basically liquidate the majority of my mining positions. Let me just see something real quick. What if I tried to buy 100 shares? I don't know what Robinhood's margin looks like. This is way too dangerous in an account this size, but it looks like they're just charging me full price anyway. So, not sure what Robinhood's margin requirements are on MSTR, but I could probably even go down to 175, get a 0.75 delta. So I'm just going to take a look and see what that would look like. And then if I went out to 45 days to expiration, so I have the 175 call. So if I go up here to like 225, in order to calculate whether this is relatively safe, in air quotes, safe, the blue collar investment website that I really like their formula, a good frame of reference would be to take the short strike, which is 225, minus the long strike, which is 175. So that's $50. And then 50 plus the premium paid, which here's 18. So it'd be 68, needs to be more than the value of this call. So that is way too aggressive. Let's go all the way to 250. So 250 minus 175 leaves 75. This is going to work out much better. 75 plus 13 is 88. And the long call costs 83. So this would be perfect. If I wanted to set up a poor man's covered call, this would cost me $7,000. And so I don't think don't have that much buying power available. So I would need to unass about 1,500, 1,600-ish in buying power to be able to do this. But should I? So MicroStrategy, in my opinion, is absolutely the most desirable asset to be in. But in a small account like this, I don't necessarily have to take this risk, because if MicroStrategy goes down to 150, this position would get completely destroyed. So I think I'm going to chicken out a little bit. But something that I noticed the other day, just this morning, they opened up some higher strikes. So I'm going to take a look at December again. The cheapest leaps that I can get out that far are $3,000. That's 30% of this account. That's very hard to justify. but I've got some of the Januaries. So let me just see what it would look like if I go to February and go to the top of the chain here. 450. 700 bucks. I can deal with that. 0.14 delta. Let me check March. March is only $200 more, a little bit extra delta. This is about 10% of my portfolio and 150 days to expiration. I would prefer it was if it was 190. Excuse me, 180. I think I can I think I can justify this one because I'll sell the other one. All right, so I'm gonna go in on this one. See if I can get a fill here. I will probably have to increase the price slightly. So this is generally a little bit more risk than I'm particularly comfortable with. Like 2% of a portfolio for leaps kind of makes sense to me. But my confidence level in MicroStrategy is more than most stocks. And with a small account, I guess if this was everything I owned, I would feel differently about it. But I'm not terribly opposed to a little bit of YOLO in an account like this. So here's my. I just went and spent 1,100 bucks on this April 2025. And how much buying power are they still saying I have? Okay, so now I only have $300 worth of buying power. So I could call it good, or I could just go ahead and take my profits in this last February one. Hmm. Let's just double check my buying power again. So they're saying I have 354 in cash. So I'm not using any margin right now. I'm going to take profits in this MSTR just for the simple fact that I need to add some more CLSK positions just to implement the strategy. This strategy isn't really about just sitting on MSTR long calls. That's not the point of doing this exercise in this 5K challenge. My my goal was to highlight selling covered calls, the wheel, all that good stuff. Okay, so now I'm back up to 1,400. So I think I will sell another put in CLSK. And I'm just going to go at the money again. So I'm going to sell this one. $1,000 worth of collateral. I can make like 30 bucks off of it. That's 3% for the week, and it's not even a full week. So this is fine. The price could go back down to 8 and I get assigned at 10. That would be fine. My average cost here is like 15, so that would be more than happy to dollar cost average and get my my cost basis down. So I think I need to put this down to 30. Let's get this. Let's get a fill. 32. Thank you. And let's refresh my buying power again. That can't be right. They didn't even count this against me. Let me just let's see what Riot looks like. Riot hasn't really recovered, I don't think, as much as CLSK. Maybe it has. Went up from 780, yeah, almost a buck. So let's look and see what I can get for a Riot put. I can actually get 20 bucks on 800 collateral. So that's not too bad. Saying I got $4,000 in buying power. Oh, because that's including margin. Now let's see if I get a fill here. 5, 4, 3, 2, 1. I don't have all day. I'm just gonna smash the bid so I can get a fill and get the flock out of here. All right, let's refresh my buying power and see. Yeah, it's got to be Robinhood. I have a little bit of a love-hate relationship with Robinhood here. So it is dropping my margin, but it's still saying that I have cash, like I'm not using margin. So I don't know what the fuck Robinhood is doing here. I'm gonna leave it there. I took profits in my MSTR February call, rolled that out to April. So I get a little bit more breathing room. I don't have to worry about the value of this thing collapsing too quickly. Last thing I'm going to do on this account, let's check and see. What did I buy? I bought some additional Tesla contracts for 49. So what's Tesla been doing? Okay, Tesla's down a little bit more. So I'm gonna pick up one more. I'm just gonna dollar cost average into these a little bit. See if I can get a fill at 39. Of course not. 38. I don't know what it is sometimes with chasing the price, but the bid is 38 and I'm bidding 38. So this should, oh God, this should have filled. I'm so annoyed. I'm actually going to put under the bid. Yeah, there's something going on with either my connection or the market makers or something, because this should have immediately filled. Refresh the damn screen. Let's try this one more damn time. All right. I'm just going to let that sit there and come back to it. So in my main account, what the hell did I even come in here to look at? Oh, yeah. So I sold this 300 strike covered call, like what, Monday? And I caught the top of that dip. And so I should probably just close this. I sold it for 12 and I can buy it back for just over 50%. Usually it takes 2 to 3 weeks to be able to buy it back for this. So I'm just taking some little quick profits here. And then I will have unlimited upside in those 100 shares again. That'll work. And I so there's a penny stock trader that I used to follow. He turned crypto trader, and he said that any break even trade is actually a good trade, which kind of makes sense with how bad most people trade in the stock market. And so I'm tempted to close this one and just break even and maybe just congratulate myself for not getting wrecked. It's only been on for about a week. Nah, I think I need to let this one run for a couple of weeks until earnings because I need this buying power to be up a little bit more. So I do need to collect some more premium. If I buy these back, I'm gonna have to shell out another 2 grand. That's just gonna lower my buying power. That's doing the opposite of what I needed to do. So I still have a ton of unlimited upside here. 1800 of my 2200 shares. So I am going to do nothing there. However, I cannot help myself with. So I'm a little bit annoyed because they added these 390 strikes. So I'm like, oh cool, let me get one. And then now they went and added the 420s. So I'm gonna take a look at December. Yeah, they got 420s over here. I'm gonna grab a 420 strike. On this dip, little mini dip. In the hopes that I will catch the entire 2025 pump on this. That's going to get me 40 delta. So, liking that. And I think I'm good with that. I'm going to wait a couple of days, let let Robinhood kind of let the funds settle for all of the contracts that I closed. Maybe they'll reconfigure my cash. It's so weird. I had $1,500 in cash here to spend, and then I bought some options and I sold some options, and it just ended up still the same but with less margin. So I don't know what the hell they're doing, but I'm good with this level for now. And if I get some serious dips on any of the miners or Tesla or MicroStrategy, then I will dip back into margin. All right, that's it for now. You good, Joe?